Over the past 30 years, one sector that has contributed the most in India's growth journey is the IT sector. From being known as the land of snake charmers, India has transformed into a land of mouse charmers. What an incredible journey so far. Today, India is the world leader in information technology with not just one or two stocks, but many top-class companies in the category. These companies have not only contributed to India's growth journey, but have also become multi-bagger stocks and rewarded the investors handsomely. Not only that, the IT industry has created top quality jobs in India. I still remember in early 2000, getting into TCS or Infosys was a dream, and the salaries were amazing. It certainly raised the living standard of middle class people in India. The most important point is that the digital revolution in India has just started. Digital technologies like cloud computing, IoT, big data, machine learning, advanced analytics, blockchain, and mobile app development would continue to grow and create immense growth opportunities for the IT sector in India. Hello everyone, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. In this video, I have analyzed the top 4 IT companies of India. That is TCS, Infosys, HCL and Wipro. Do you know the total market cap of all these 4 companies together? The combined market cap of all these companies is more than 22 lakh crore rupees. Yes, 22 lakh crore rupees. That's crazy, isn't it? So in this video, we'll start with a brief understanding about the IT sector in India, then we will quickly touch base upon each of these 4 companies. And then finally, we'll compare these companies based on financial parameters like market cap, 5-year stock return, revenue size, 5-year revenue growth, profit size, 5-year profit growth, operating margin, ROE, ROCE and debt to equity. Then we will look at the shareholding pattern in each company. Then we will do the valuation analysis to understand which company is undervalued, overvalued or fairly valued. Finally, we would conclude the best company among all these 4 companies. But before we begin, this video is only for educational purpose. And if you want to learn how to pick quality stock, then you can explore my course on money management. Alright, let's get started. If you look at the IT sector in India, it generated a total revenue of $191 billion in FY20. That's roughly around 14.32 lakh crore rupees, with total contribution of 7.7% in India's GDP. It is expected to become a 350 billion industry by 2025, and then it would contribute 10% in India's GDP. In fact, IT industry is one of the biggest employer in India and employs around 43 lakh people as of FY20, and it would continue to create jobs in the future. In fact, the Indian IT sector is so huge that it captures more than 50% of global IT business. Now let us look at the key factors that would drive the growth of IT sector in India. First factor is cost advantage. The biggest advantage of Indian IT sector over other country is cost advantage. India is almost 5 to 6 times less expensive as compared to US. No wonder why every top company of the world hires IT support from Indian companies. This has been the biggest growth driver for India and would continue to drive the growth. Second factor is leadership in the sector. Friends, over the past 30 years, India has created a strong dominance in the global IT sector with a successful track record. Today, Indian IT sector has the right kind of experienced leadership to handle multi-billion-dollar projects and implement them successfully. So there is a high level of trust due to past experience and strong leadership. Third factor is growing demand for technology solutions. Initially, technology was adopted by large companies, but today every business is implementing technology in one form or another. In fact, technology revolution has just started in India. Your payments are done with UPI technology, shopping is done online on e-commerce platform, education and entertainment is done via online platforms like YouTube, Netflix, etc. Your cars are going electric and autonomous. Now you can operate your fridge, TV, light, etc. with your mobile phone. In short, everything is going digital, and this would create huge demand for IT sector in India. Fourth factor is equipped with skilled workforce. Over the past 30 years, India has developed a huge skill set in the IT sector. So Indian IT sector has all the required skill set to cater to the ever-growing demand for IT technology that would drive the growth in the future. Established in 1968, TCS is not only the largest IT company in India, but it is the largest IT company of the world. It is also the biggest employer in Indian IT sector with close to 5 lakh employees across 46 countries as of March 2021. TCS has expertise across the sectors including banking and financial services, consumer goods and distribution sector, energy and utility, high tech, insurance, manufacturing, retail, transportation and so on. Its services include automation and artificial intelligence, IoT, blockchain, cybersecurity, cloud computing, consumer experience using digital, etc. Earlier, TCS was led by Mr. N. Chandrasekaran till 2017, and later N. Chandra became the chairman of Tata Group. Currently, TCS is led by Rajesh Gopinath, who became its CEO in 2017. Established in 1981, Infosys is the second biggest IT company in India, and it was started by 7 engineers in Pune with a capital of just $250. The person on the extreme left is Narayan Murthy. Infosys is also known as pioneer of IT industry in India. It has more than 2.5 lakh employees and has presence in 46 countries in the world. Infosys has expertise across sector including financial services, retail, manufacturing, utility, media and entertainment, aerospace and defense, insurance, education and so on. Its services include digital marketing, digital commerce, data analytics, blockchain, IoT and so on. It provides software development, IT consulting, business process management, etc. Currently, Infosys is led by Sahil, who joined Infosys as CEO in 2018. Established in 1976, HCL initially started as R&D Center for HCL Enterprise. But then in 1991, it was established as an independent company. HCL delivers services across industry vertical to leading enterprises, including 250 of the Fortune 500 and 650 of the Global 2000 companies. HCL offers product and services through 3 business units. These are IT and business services, engineering and R&D services, and product and platforms. ITBS enable global enterprise to transform their businesses via digital technologies like cloud, IoT, blockchain, etc. ERS offers engineering services and solution in all aspects of product development and platform engineering. PNP provides modernized software product to global clients for their technology and industry specific requirements. HCL is led by Roshni Nadar, who is the daughter of Shiv Nadar. Roshni is the first woman to chair the listed IT company in India. Although Wipro was established in 1945, it made its entry in the IT sector in 1982. Under the leadership of Mr. Azim Premji, Wipro became one of the most reputed names in IT sectors. Wipro provides services like cognitive computing, hyperautomation, robotics, cloud, analytics, and emerging technologies to help the clients adapt to the digital world. It has over 1,90,000 plus dedicated employees serving clients across 6 continents. Wipro recently had a change in leadership and Thierry Delporte joined Wipro as CEO in July 2020. Overall, from the business point of view, all these IT companies provide all the required services in the IT domain across sectors. Now let us look at the financial comparison for each of the company. If you look at the market cap, TCS has a market cap of around 11.45 lakh crore. That makes TCS the second largest company in India by market cap after Reliance. Infosys has a market cap of 5.71 lakh crore and then HCL has a market cap of rupees 2.46 lakh crore and Wipro has a market cap of rupees 2.68 lakh crore. So in terms of market cap, TCS is number 1, followed with Infosys at 2nd position, Wipro at 3rd position and HCL at 4th position. Although Wipro and HCL are almost at par. If you look at the stock return in 5 years, TCS shares have jumped from rupees 1260 to current levels of around 3150, giving 20% CAGR return. Infosys shares have jumped from rupees 600 to current level of 1350, giving around 18% CAGR return. HCL shares have jumped from rupees 360 to current level of rupees 917, giving 20% CAGR return. Wipro shares have jumped from rupees 200 to current level of rupees 500, giving 20% CAGR return. So in terms of stock return in last 5 years, TCS, HCL and Wipro are at par with 20% CAGR each, followed with Infosys. If you look at the revenue size, TCS revenue have grown from rupees 1.08 crore to currently at rupees 1.64 lakh crore. Infosys revenue have grown from 62,000 crore rupees to currently at 1 lakh crore rupees. HCL revenue have grown from 31,000 crore rupees to currently at 75,000 crore. Wipro revenue have grown from 51,000 crore to currently at 62,000 crore rupees. So in terms of revenue size, TCS is number 1, followed with Infosys at 2nd position, HCL at 3rd position and Wipro at 4th position. If you look at the CAGR growth in revenue in last 5 years, TCS revenue have grown at a CAGR of 8.61%. Infosys revenues have grown at a CAGR of 9.98%. HCL revenues have grown at a CAGR of 19.34%. And Wipro revenues have grown at a CAGR of 3.86%. Clearly, HCL is leading in revenue growth at number 1 position. It is followed with Infosys at number 2, TCS at 3rd position and Wipro at 4th position. If you look at the profit size, TCS profits have grown from rupees 24,270 crore to currently at rupees 32,430 crore. Infosys profits have grown from 13,489 crore to currently at 19,351 crore rupees. HCL profits have grown from rupees 5,602 crore to currently at 11,145 crore. And with profits have grown from 8,908 crore to currently at 10,796 crore. So in terms of profit size, TCS is number 1, followed with Infosys at number 2 and then HCL is at number 3 and Wipro is at number 4th position. If you look at the CAGR growth in profit in last 5 years, TCS profits have grown at a CAGR of 6%. Infosys profits have grown at a CAGR of 7.48%. HCL profits have grown at a CAGR of 14.75%. And Wipro profits have grown at a CAGR of 3.9%. Clearly, HCL is leading the profit growth at number 1 position, followed with Infosys at 2nd position, TCS at 3rd position and Wipro at 4th position. If you look at the operating margins, both TCS and Infosys operating margins are at par with consistently about 25%. Latest margins of both TCS and Infosys stand at 28%. HCL margins have consistently improved in the last 5 years. The latest operating margin stood at 27%. Wipro margins are comparatively on the lower side. However, the latest margin are looking good at 24%. Overall, in terms of operating margin, TCS and Infosys are at number 1 position, HCL is at 3rd position and Wipro is at 4th position. Next parameter is to gauge the profitability of the company. We will compare the ROE, that is return on equity, and ROCE, that is return on capital employed. If we look at the ROE, TCS is leading with consistently high ROE. Its latest ROE is 37.5%. It is followed with Infosys with latest ROE of 25.34%, then HCL has a ROE of 18.6% and Wipro has an ROE of 19.6%. Wipro was consistently below HCL until FY21, but in latest number, Wipro has beaten HCL in ROE. So in terms of ROE, TCS is at number 1 position, Infosys is at number 2nd position, Wipro is at 3rd position and HCL is at 4th position. Although HCL and Wipro are very close. If you look at the ROCE, TCS is again leading with consistently high ROCE. Its latest ROCE is 47.1%. It is followed with Infosys with latest ROCE of 32.8%, then HCL has 18.6%. So in terms of ROCE, TCS is at number 1 position, Infosys is at number 2 position, HCL is at 3rd position, and Wipro is at 4th position. Although all 4 companies are highly profitable. If you look at the debt to equity, TCS latest debt to equity is 0.1. Infosys latest debt to equity is 0.07. HCL latest debt to equity is 0.16 and Wipro latest debt to equity is 0.16. So all 4 companies are comfortably placed in terms of debt to equity structure. If you look at the shareholding, TCS promoters have 72.19% shares in the company. Infosys promoters have 12.95% shares in the company. HCL promoters have 60.33% shares in the company. And Wipro promoters have 73% share in the company. So all companies except Infosys has high amount of promoter shareholding. Please note that the shareholding of promoters has been consistent for all 4 companies in the past 3 years. Finally, the most important part. How is the valuation of these IT companies? TCS is currently trading at rupees 3,150 at a P ratio of 34. Infosys is trading at rupees 1,360 at a P of 29.6. HCL is trading at 917 at a P of 22 and Wipro is trading at rupees 500 at a P of 25. I am not comparing the valuation with median P because the IT sector was undervalued in the past and all 4 companies have lower median P. So it won't be the right comparison. But overall, all 4 companies are looking reasonably valued. However, the company that is currently trading at the most attractive valuation is HCL. I think HCL at a P of 22 is a stealer deal. So from valuation perspective, I would rate HCL at number 1 position. It is followed with Wipro at 2nd position, Infosys is at 3rd position and TCS is at 4th position. Overall, if we conclude, all 4 companies are excellent in terms of business and have the required skill set and growth plan for the future. In terms of market cap, TCS is number 1, followed with Infosys at number 2, Wipro at number 3 and HCL at number 4. In terms of 5-year stock return, TCS, HCL and Wipro are at par with 20% CAGR. It is followed with Infosys at 18% CAGR return. In terms of revenue size, TCS is number 1, followed with Infosys is at number 2, HCL is at number 3 and Wipro is at number 4. In terms of revenue growth in last 5 years, HCL is at number 1 position, followed with Infosys at number 2, TCS is at number 3 and Wipro is at number 4 position. In terms of profit size, TCS is the number 1, followed with Infosys at number 2 and then HCL at number 3 and Wipro is at 4th position. In terms of 5-year CAGR growth in profits, HCL is leading at number 1 position, followed with Infosys at number 2 and then TCS at number 3 and Wipro at number 4. In terms of operating margin, TCS and Infosys are at number 1 position, HCL at number 3 and Wipro is at number 4. In terms of ROE, TCS is at number 1 position, Infosys is at number 2, Wipro is at number 3 position and HCL is at number 4 position. In terms of ROCE, TCS is at number 1 position, Infosys is at number 2, HCL at number 3 and Wipro is at 4th position. Although all 4 companies are highly profitable. So in terms of growth, HCL is the fastest growing company and in terms of profitability, TCS is number 1. All 4 companies are comfortably placed in terms of debt to equity structure. In terms of valuation, HCL is at number 1 position, followed with Wipro at number 2, then Infosys at number 3 and TCS at number 4 position. If you ask me to choose one stock, my pick would be HCL. If you ask me to pick 2 stocks, then I would pick TCS and HCL. Third, I would add Infosys. But overall, all 4 companies are great with bright future growth prospect. I hope you enjoyed the analysis. I will see you with another video. Till then, take care. And course details are in the description box. Hope to see you in the course.